Um, I said everything's just getting from bad to worse. Now, a couple of jobs have announced they're laying off workers. Airbus or whatever it's called. They announced that they're laying off 15,000 workers. Schlumberger just announced they're laying off 21,000 people. So it's just going to get worse. Schlumberger is cutting more than 21,000 jobs as the global coronavirus pandemic squashes demand for energy and oil prices are routed. The company will pay more than $1 billion in severance benefits. The job cuts announced on Friday, about a quarter of its entire workforce, pushed the number of people employed by the world's largest oilfield service company close to where it was at the start of the oil and gas fracking boom that upended global energy markets and put the U.S. on top. Chesapeake Energy, a pioneer in fracking, sought bankruptcy protection last month. I remember because I did a video on that. So yeah, this has probably been the most challenging quarter in the past decade," said CEO Oliver Lapuche. The crude prices have dropped about 33% this year, and natural gas has fallen 17% as much of the world took shelter from the coronavirus. So nobody's really going anywhere. They're not really traveling. So almost all major users of the energy have been crippled because of this lockdown. On Thursday, American Airlines had posted a loss of more than $2 billion, and Southwest Airlines said that it lost about $915 million. That pushed the combined second quarter loss of the nation's four biggest airlines to more than $10 billion. The number of people being screened at the U.S. airports is still down more than 70% compared with last year, according to the Transportation Secretary Administration. Millions of people are working from home rather than commuting to work daily. The cruise industry is shut down, and factories, big consumers of energy, have been hammered by this. But the slowing global economic growth had already begun to weigh in on the energy sector, and companies carrying a lot of debt had begun to fail. More than 200 oil producers have filed for bankruptcy protection in the past 5 years, and the global pandemic has intensified the shakeout. Last month, British oil giant BP PLC said it would reduce its global workforce by laying off 10,000 workers. On Friday, Schlumberger Ltd. said that the second quarter revenue plunged about 35%, and the company lost 3.43 billion dollars. It expects the vast majority of the severance hit for departing employees would take place during the second half of the year. The company operates out of Houston, and they have major offices in London, Paris, and Hague. But yeah, that sucks. But now, but like I said, it's just gonna keep getting worse. Now to get onto where to the stocks and bonds and everything. Wall Street down after worldwide slide, but gold is at a record high. Stocks have closed broadly lower for the second day in a row Friday, as Wall Street gave back some of its gains from a mostly solid July rally. The S&P 500 fell about 0.6% and ended the week with its first weekly loss in 4 weeks. The pullback, though, which eased somewhat by afternoon, came as traders turned cautions amid increased tensions between the world's two largest economies and mixed a batch of company earnings reports. Technology and healthcare companies accounted for much of the selling, with chip maker Intel posting the biggest drop in the S&P 500. Those losses outweighed gains by companies that rely on consumer spending, including Olive Garden owner Darden Restaurants, the home builder Polta Group, and retailers like Target and Best Buy. Stocks also sank across Asian and European markets. Cautious investors shifted their money into gold, driving its price to an all-time high of nearly $1,900 an ounce. The last record high for gold was set in 2011. Treasury yields held relatively steady but remained close to the lowest level since April. Investors are already wondering whether prices are too high, and then you get a little bit of tension with China. You get a little bit of disappointing news from Intel, and that just sort of feeds on it itself. Said Mike Zigmont, director of the trading and research at Harvest Volatility Management. The S&P 500 had dropped about 20.03 points to 3,215.63. The Dow Jones Industrial Average slid about 182.44 points, or about close to 1%, to about 26,469.89. The Nasdaq Composite fell 98.24 points, or also close to 1%, to about 10,363 points, 0.18. Each of the indexes have been down more sharply in the morning, with the Nasdaq off by as much as is 2.3%. Small company stocks were the biggest losers. The Russell 2000 index gave up about 22.65 percentage points, or basically it fell 1.5% to about 1,467 to 0.55. The coronavirus pandemic remains the most dominant force in markets with its potential to destroy lives and economies. But other risks are also bubbling up, headlined by Friday's worsening relations between the United States and China. Investors are also concerned about a recent uptick in layoffs, and spiking coronavirus counts across the Sun Belt led more businesses to shut down. Extra benefits for those out-of-work Americans from the federal government are set to expire soon, and worries are rising about whether Congress can reach a deal on more aid for the economy. Nearly half of the Americans whose families experienced a layoff during the pandemic believe those jobs were lost forever. According to a poll from the Associated Press NORC Center for Public Affairs Research, despite all those challenges, the S&P 500 remains only about 5% below its record that was set in February after roaring back from an earlier nearly 34% plummet. This week's stall for the S&P 500 follows the 3 straight weekly gains driven by hopes that the economy was regaining its footing. Underlying it all is its massive aid for the economy promised by the Federal Reserve, including record low interest rates. The Fed is the big story. The Fed is the big story behind this market. The liquidity it's provided, said Teresa Jacobson, managing director of the UBS Private Wealth Management. It gives a great deal of support for upside in the market, but there are momentarily blips when we pause and give back a little bit. On Friday, the blip came after China's foreign minister ordered the closure of the U.S. consulate in the western city of Chengdu. It echoes a similar move earlier this week by the United States to close the Chinese consulate in Houston. Such moves have investors on edge because of how viciously markets have swung in prior years when the fake President Donald Trump was pressing his trade war with China before they agreed to a temporary truce earlier this year. Alongside the eviction of the Houston Chinese consulate, the risk of the U.S.-China conflict escalated into a Cold War is worrying, said Hayaki Narita of Mizuho Bank. A speech Thursday by U.S. Secretary of the State Mike Pompeo, who's another fat fucking dumbass, saying that securing our freedom from the Chinese Communist Party is the mission of our time, adds to the rhetoric CERN to incense Beijing, making it still more difficult for either side to aid back down, he said. Technology stocks have also been in the spotlight after a sharp slide for them on Thursday, and it helped drag the S&P 500 to its worst loss in nearly 4 weeks. Microsoft, Apple, Amazon, and other giants have cruised through much of the pandemic on expectations that they can keep growing despite all the challenges for the economy. But critics say that enthusiasm for them was overdone, with prices too high even after accounting for the huge profits that they can produce. Apple slipped about 0.2% after having been down 4% earlier in the day. Microsoft slid about 0.6%. Intel sank 16% after it delayed the release of its new 7 nanometer chip. The yield on the 10-year Treasury held steady at 0.58%. It tends to move with investors' expectations for the economy and inflation. In commodities trading, the price of gold for delivery in August, the most actively traded contract, rose about $7.50 to about to $1,897.50 an ounce. That beat the previous record record high close of $1,891.90 that was set back in August of 2011. The benchmark U.S. crude oil set for September delivery rose about 22 cents to settle at $41.29 a barrel, and the Brent crude oil for September delivery rose 3 cents to $43.34 a barrel. Now, if you like the if you like the video, hit the like button and subscribe to my channel, Ryan Van Wyk, and also hit the notification bell so that you'll be notified when a new video comes out. And thanks for listening.